Hello everyone, my name is McAndrew. I'm with Family Wealth Planning Partners, and I'm bringing you this month's market commentary. Today we're going to cover three big items that affected the market in the last month and could continue to affect the markets in the months to come. The Federal Reserve's surprise announcement, inflation, and the infrastructure deal. We'll start off today by talking about the Fed. So the Fed had the FOMC meeting in June, and one of the biggest pieces of news that came out of that was they now mention that they believe interest rates will have to start rising probably at least twice in 2023. That was big news considering it had been as recent as March that they mentioned that interest rates would stay the same, would remain unchanged until 2024. So that kind of tells you a little bit about where their stance is on inflation. It's kind of moved more towards that it's going to be around for a little while longer, and they may need to adjust monetary policy a little bit to try to help combat that. A couple things here is also the Fed raised their inflation expectations to 3.4% at this meeting, and that's up from 2.4% projection in the March meeting. So inflation still remains a concern with the Fed here as well, although they do still stand true on holding the fact that they believe that it is transitory in nature. Although Jerome Powell, the chairman of the Fed, indicated that the time for talking about stimulus tapering is now. They have not really come out and said anything about how they're going to taper the stimulus or what their plan is for that. But he did mention the time for talking about that is now. We're going to continue to keep an eye on this, but that's a little bit of an update what came out from the Fed meeting. And the week that happened, the markets were rattled. So in June, the markets did not respond positively to this news during the week of the Fed meeting. Inflation is the next topic we're going to talk about. This has been one that we've been talking about for the last couple months. I know it's been on everybody's radar as everybody's paying higher prices at the gas pump. Everybody's paying higher prices around for goods, food, and everything. So inflation has been a headline the last several months. We continue to see that it's going to be a headline. There's a couple factors that are driving this inflation right now. So one is a shortage of labor. That's a big factor. So we've got a lot of companies out trying to hire people, and jobs are being created, and we're driving around town and we can see that this company's hiring and they're giving you a sign-on bonus. They're trying to pay higher wages and whatnot. So companies, when they have to start paying people more, they're offering these incentives to be able to get people back to work. It's going to cost, in the short term at least, the prices of all their goods and services to increase. So that's a little bit of it right now, is the labor shortage. The second part of it is what's called a supply chain bottleneck. So just on the flip side of this, back last year, when the pandemic first started, you couldn't go to a store and find toilet paper or cleaning supplies or whatnot. So consumers would rush to the stores to get those and stock up on those goods so they'd have them in their house in case they needed them. Well, the same thing's happening here now on the flip side, fast forward a year with the businesses. They've got a lot of customers that are demanding these goods, so they are ordering more inventory than what they need to try to stock up on these goods to be able to get to their consumers. And the same thing for the service businesses. They're stocking up on materials so they can get the service, so they can use that material to provide the service that they may need to do. Well, that's causing a bottleneck. So it's causing a lot of times orders are pushed way out, and now the prices, because there's so much demand for it, is causing the prices for everything to go up. So these are two key factors right now when it comes to inflation. I know we've been talking about it for a little bit, but this is another big reason. Inflation, if it prolongs for a long period of time, can have a big impact on somebody's portfolio. So this is at the place where I'm going to kind of say that if you're looking at your portfolio as a whole, you obviously want to have your emergency funds in place there in cash. That's something that you're going to have, and you need to have quick access to that in case of emergency or short-term needs come up. But for the rest of your portfolio, that's the reason why you want to have it invested somewhere that you can try to combat inflation to give you better purchasing power down the road and try to keep up with inflation and be ahead of inflation. So we'll continue to monitor the inflation. and give you updates on that as we see any changes. The last thing I'm going to mention today, and this is just going to be in a mention just because it happened, there was some news that came out. The market did respond positively to it last month, was the infrastructure deal. And I'll go and say this is just in the very beginning talks here, but the infrastructure has been talked about for a long time. So basically investors got really happy when they heard that the president met with a group of senators and they agreed on a deal, and it could be a potential of a passage of a $1 trillion package, an infrastructure deal. And that was good headway. Now this is a far ways away from becoming an actual bill, so there's still going to be a lot of conversation and some things that probably change and so on down the road. But I did want to make light of this and put this in this market commentary because it did happen in June, and markets were happy when they got the news. The markets responded positive to that when they got the news on this. So we'll continue to watch that as well. So we'll monitor all of these different topics in the months to come. Once again, my name's Aaron McAndrew with Family Wealth Planning Partners. If there is anything that we talked about in this market update here that you guys would like to talk about further, feel free to schedule an appointment with us on our website or give us a call. Again, thanks for tuning in, and see you next time.
The information given herein is taken from sources that IFP Advisors, LLC, doing business as Independent Financial Partners, IFP, IFP Securities, doing business as IFP, and its advisors believed to be reliable, but it is not guaranteed by us as to accuracy or completeness. This is for informational purposes only, and in no event should be construed as an offer to sell or solicitation of an offer to buy any securities or products. Please consult your tax and/or legal advisor before implementing any tax and/or legal related strategies mentioned in this publication, as IFP does not provide tax and/or legal advice. Opinions expressed are subject to change without notice and do not take into account the particular investment objectives, financial situation, or needs of individual investors. This report may not be reproduced, distributed, or published by any person for any purpose without IFP's express prior written consent. Securities offered through IFP Securities, LLC, doing business as Independent Financial Partners, IFP, member of FINRA and SIPC. Investment advice offered through IFP Advisors, doing business as IFP, a registered investment advisor. IFP and Family Wealth Planning Partners are not affiliated. The information given herein is taken from sources that IFP Advisors, LLC, doing business as IFP, IFP Securities, LLC, doing business as IFP, and its advisors believed to be reliable, but it is not guaranteed by us as to accuracy or completeness. This is for informational purposes only, and in no event should be construed as an offer to sell or solicitation of an offer to buy any securities or products. Please consult your tax and/or legal advisor before implementing any tax and/or legal related strategies mentioned in this publication, as IFP does not provide tax and/or legal advice. Opinions expressed are subject to change without notice and do not take into account the particular investment objectives, financial situation, or needs of individual investors.